Good evening, everybody. It's not very Christmassy here in Pittsburgh. It was in the mid-50s here today. Even my buddy up near Watertown, New York, said they don't have a bit of snow up there, which is unusual because they'll usually have about 2 feet by this time. Okay, we had a little bit of change of investor sentiment today. Even though that was not a bearish signal in the Dow, it kind of took the wind out of the uptrend. So we're up here in the overbought area. Not a sell signal, but a hard enough selling to bring things right back into the trading range. But it was more emphasized over here in the NASDAQ with the close back below the T-line showing there isn't any bullish direction at this point. So don't know whether they're going to sell it off hard, but we might be starting to form up kind of a wedge formation. So this is why I always tell people, let the market tell you what the market is doing, because everybody would suspect a Santa rally, but the charts tell us what actually is happening. So good amount of selling. Let's take a gander here at crude oil, just sideways. Gold, just sideways. Soybeans took a big whack today, which means it's sideways. So nothing's going anywhere. There you go, Jay. All right, so we've got kind of a hodgepodge here tonight. Entry strategies. We were going to buy TMHC, one of the home builders. And it opened positive today. Well, it did open positive, but notice what it did. It immediately started trading lower. So a lot of people ask, well, what happens if something trades positive, then turns around and heads the other way? Sometimes you're lucky. When it opens and immediately turns around, you don't get in it. Sometimes it will open and trade positive and then start backing off. Then you have to decide when to close out the trade that didn't work. But remember, the probabilities are that if it's opened positive, it was probably going to be a J-hook pattern. But we've still got good clarity, is that the right word, that when it opens positive and starts trading lower, it's just a very simple strategy. You don't buy. You don't buy, you don't buy. And then if they turn it around and come back up through the open, that means they are buying. That's when you can be buying, because that's what we would expect from that pattern. So not very many long positions acted real great today. Fastenal continued up. Arlo backed off a little bit, but makes this trade very simple. If you're long Arlo, it has to open positive tomorrow. If it opens lower, they're still drifting it back to the T-line. So that's where the doji rule becomes very beneficial. Oscar, all you can do right now is stay long and use the T-line as your stop. WG, same scenario. If they open this lower, they're probably coming back toward the T9. Now, that would also be a function of If we wake up tomorrow and the pre-market futures are showing the market's going to open, oh, now I forgot what I was saying. Well, the market's opening lower and stocks are opening lower. That's a pretty good indication that the bulls aren't pushing things at this point. So you can use that logic when you can see where you are. Today, INFN was trading nicely, broke up through the 200. But when it came back down through the 200 and the market was selling off, hadn't done a sell signal yet, but what would be the implications? Well, the market was selling off, and this had traded up and came back down through the 200, which is what we were expecting it to do, is break out. Getting up toward the overbought area, what did it say about our probabilities? Well, our probabilities are getting bleak. Went ahead and closed out the position, because where was it starting to sell off? Right about the same level it sold off before. So just because it hadn't completed a sell signal, you already started to see the ramifications of the market trend, as well as where it would start, where the stock was starting to sell off, right there at a level that everybody else was watching. Riot, we have a lot of these type of charts where they're kind of bearish J-hook patterns. Riot, Olo is a significantly nice chart because there's your failure at the 50, best friend gap down through the T-line. So what do you think everybody else is watching? First, to see if they would close below this level. And secondly, you're in a downtrend. This area becomes your next likely target. But what makes this a very observable, strong short? That bearish best friend signal. There's lots of charts that look like this. I'll get to them. All right, so Apple, which had been acting well, there's your dark cloud. If I'd been long Apple, I would have closed it out today with the dark cloud in the overbought area and the market's starting to sell off. That's the whole point of learning your ABCs of candlesticks, is to see what signals are you looking at. Bearish left-right combo, Amazon, still in a downtrend. And here's what we're going to be working on this weekend. The high probability day trade setups. Now I call them day trade setups because even for the day trader, you have two strong ramifications when you identify a setup. One, that it's going to go in the direction you want it to, which is obviously what you want in a day trade. And two, the magnitude of the move is significant enough that that becomes some place where you want to have your money for the day. Now, I call it day trade setups, but it's just as relevant on swing trades. At least you know you're heading in the right place or heading in the right direction at the right time. This is what we call 2+2 analysis. There was a perfect place to go short when you had a bearish left-right combo, a doji type day, and then they start trading it down. What can we expect? This is why knowing the signals and patterns are very beneficial, because if that was wave for the first part of a doji sandwich, that told us we had a significant potential move to the downside. Same thing here. Wave first day of a doji sandwich. So here's your 2+2. A doji hammer right smack dab on the 50. What's our doji rule tell us? They open it lower. More than likely, we're going to get another day like this. Now we're looking at it as a doji sandwich day. That means we can be shorting it immediately without hesitation. Because what do you think everybody else is watching? They're watching to see what it's going to do here at the support level. And when it's not acting as support, they start selling or bailing out. We just can see that with much more expediency to know we could be shorting right in here because it opened lower after a doji type day. That was Tesla. Nvidia, you could see the failure. There was kind of your morning star signal, a strong morning star signal. But this is why people always ask, well, can we be buying on this day? You can, but why diminish your probabilities? What did we need to see after this day? Bullish confirmation. Next day they did a bearish harami. And it could still go up. Next day they closed below the T line. What did that tell us about this signal? It didn't work. Look for more downside. And Netflix. Same scenario. Look where your evening star signal occurred. I'm sure you have all heard me many times say when somebody asks about a trade, is this the time to be buying? Well, the answer is, if you're buying, watch to see what it does when it gets to the T line. Or on a day like this, I would rather be buying on seeing a close above the T line. So this really needed that doji sandwich breakout. Well, we didn't get it. This becomes a very, very obvious use of the T line because, again, the probabilities are, and I say this over and over, the probabilities are pretty strong that you're going to be in a downtrend because they stopped at the T line, which acts like that natural support and resistance level, because nobody has the T line on their chart. The one indicator that greatly enhances your visual analysis is, one, you have the signals, and then two, when you combine the T line with that, knowing that it's a natural support and resistance level of human nature, your trading abilities expand dramatically. That was Netflix. Okay. So everything that we do in candlestick analysis is based upon common sense. If we're in an overbought condition, where do you put your safety stop? Right here. Because if the bears have enough strength to bring it back down through the open of a candle that's moved a decent distance away from the T line in the overbought condition, where do you think their first target is going to be? Probably at least back to the T line. Now, I advocate putting in safety stops, not because that is sage advice. It's because the number of times through my trading through the last 40 years, I've discovered so many times where I said to myself, man, I just wish I put a safety stop right there. So now I do it. And what's our biggest fear factor? Oh, they come down and they stop us out and then they take it right back up. Well, remember, we're playing the probabilities that if you're in the overbought condition, that far away from the T line, and there's enough selling pressure here, and they have enough selling to bring it down, stop you out, and take it back up, it's probably time to be out of that position anyways. Okay, so what is that one? Today there was news on this one. It had, I guess they got phase 3 good results or something. You can see with the inverted hammer, they took it up. That's one to keep an eye on. Now, I was playing this one today that it could have been one of those that just skyrocketed, but it's still a nice chart setup. Blue, same scenario. Gapped it up on news. Now, this is where you use your knowledge of the doji. If it opens positive and starts trading positive, you can be buying that 45 degree. There's your best friend signal on NSA. Look at your best friend breakout of the fry pan bottom. That becomes a very strong bullish place to put your money. Oh, that's where they are. So I'm going to backtrack here a little bit. A 45 degree is where it just kind of moves on a steady trend after that. Okay. All right, so here's the things that we're going to be looking at Saturday. So what did we just see over? That's where it was. What did we just, no, that wasn't it. Blue. Big gap up. Now remember, just common sense tells us if there's a big gap up, what's it telling us? It's telling us there's a major change of investor sentiment. So what do we look for after those big gap ups on a signal? We're looking to see which way they're taking it, because this told you something. But there was now a new strong dynamic in that chart pattern. You can see what's happened on TQ or TRQ. Fry pan bottom, gap up. If this opens positive, you've got kind of a bullish flutter kicker. But what would we expect on a positive open? That this is start of wave 3, that being wave 1, and everybody and their brother was watching to see what was happening here at the 200. That tells you that investor sentiment has kind of now gone very positive for whatever reason. Now, anytime I see something like this, I use our RARE process. Go back, research analysis, reverse engineering, see why this price moved, see what the news was that started that uptrend. ACET, big gap up doji, then bullish trading after that, chopped it around, but what do we kind of expect now on this trend? There's kind of our 45 degree, a steady uptrend. Why? Because this right here told you there was a major change of investor sentiment. CF, somewhat along that same lines. Now, it hasn't moved dramatically, but you had a bearish candle, doji gap up, positive trading just barely on a day where the markets were pretty bad. I would just keep an eye on this one to see if the bullish sentiment stays in place. And same thing on the bearish side. For a good day trade setup, that if this opens lower after your bearish belt hold in a downtrend, if this opens lower, what can we expect? Probably that same magnitude right there. Okay, let's see what else I got here. Well, for crying out loud. I don't know why that doesn't come up here. CLVT looks like a bobble breakout, but it won't come up. RDWR. Here's another strong day trade setup trend kicker signal. We can see the pattern, obviously, a fry pan bottom. We can see that it failed here at the 50. But if we were watching this and we could see they were going to open above the previous day's open, that tells you want to be buying immediately because there's already a kick type signal in there, closing here and gapping up, and they're doing it at this level, and they're doing it coming out of a fry pan bottom. That makes this a very high probability day trade, trend, or swing trade setup. Well, bam. Not quite a scoop pattern, but I would definitely keep an eye on this one on positive trading tomorrow. And here's something that I always try to point out, that if you have a big move like this, and the next day they open it lower and start trading down, close it out. You can always buy it back when the probabilities go back in your favor when it comes up through here. But statistically, if they open it lower and start trading lower, you want to be out of this trade until they can get back up through that level. That was kind of the same scenario we saw on, well, for crying out loud, I can't even remember. Oh, getting close. DWAC. Big price move. Big price move, opens lower the next day, close it out. The probabilities have gone against you until they can get back up through this level. Okay. So here's one that doesn't have anything real dynamic just yet, other than a bullish harami, kind of a belt hold, inverted hammer, bullish confirmation. This one is setting up. Stochastic's coming up. There's a wee little teeny gap right there. So you could be buying this one immediately on positive trading, knowing more than likely you're going to come up here at least to fill this gap, and then potentially continue to head up. So you know, even on a bad hair day like the markets had today, somebody was still buying this right here in this basing area. Okay, Cat, you do this. The bigger the signal, the more compelling. There's been a change of investor sentiment, and that's even after this whole series of dojis. That becomes a good-looking setup for positive trading. What was that? That was Puffin. Kitty, this, you make this difficult. Oh, this looks very lethargic. Somebody asked about it today, and I poo-pawed it. However, as I went back and looked at it, it gapped up. That's getting ready to do a bullish flutter kicker signal, which means if this opened positive and especially came up through today's high, which would also be coming up through the T line, that you could be buying. Cat. Nothing wildly exciting on this. This is Dog Z. Other than the fact you have a little J-hook type pattern, you can probably expect it to come back up and test this level, but pretty much you can assume the probabilities are this one's heading higher. Not that I would chase after it in these market conditions, but let's say the market did stabilize and traded flat or sideways. At least you have a bullish chart to take a look at. Same thing with Hain, H-A-I-N. Bullish engulfing, doji sandwich, first target, second target. And there's your bearish double doji. So where was the ultimate entry point? Right there. Notice how they opened right on the T line and then headed south. That was a perfect entry point to go short right here. And this would also imply there's more downside, probably heading for the 200-day moving average. Oh, that's terrible handwriting. I don't know whether I was implying that was kind of a double doji setup, but you can see the J-hook pattern on First Trust. Is that the one I was looking for? Apparently. All right, so a lot of people were asking whether they could short specific stocks today. Some of them were in drifting downtrends. What we want to look for are the ones that have the strong downtrends. So American Airlines, there's your bearish best friend. United Airlines, there's your bearish best friend. So these are telling you not only were they trying to get out of these positions, but they're trying to get out of them with great enthusiasm, which is exactly where you would rather be short than shorting something that was just kind of drifting lower. Dix, there's your bearish J-hook pattern with the obvious. Closed right on the 200-day moving average. If this opens lower tomorrow, you could be shorting it immediately because where do you think everybody's watching? Wait to see what it does right here. If it opens lower, what's it telling us? It's telling us this bearish J-hook is going into wave 3. So this makes for, again, a very good day trade setup that if this opens lower, the market looks like it's opening lower, you can be shorting this immediately. Hold on, somebody was messaging me what the link was for the weekend. There's the link for the weekend. Another perfect pattern setup. There's your blue ice failure. Where do you think your next target is likely to be? Down here. Macy's. That one's on Dillard's. This one's Macy's. Bearish J-hook pattern. Failing at the 50 and the T-line. Where do you think your next target's going to be? Down here. Under Armour, yes. And if it opens lower, what's it telling you? It's not supporting at the 200, which is also the last support. Wave 1, Wave 2, Wave 3. So there were a lot of charts that looked like this today. You can see on Park Hotels and Resorts, there's your left-right combo failure at the 50, gap down below the T-line. There's a gap right here, at least puts you in the right direction. There's your first target. There's your next target somewhere down there. Now again, this is all predicated on if we see the markets opening up weaker tomorrow. Oh, I guess I could check that, couldn't I? There's Carnival, Doji, Harame, Hanging Man Doji, gap down, first target. That looks like the futures are up 51 points. So we'll have to see how they open the market tomorrow. The electric vehicle sector still drifting lower. Never got back up above the T-line. Look at your gap down. IONQ was going to be a buy, headed open positive off this Morningstar signal. But notice what happened right after the Morningstar signal, failure at the T-line. An Evening Star signal. There's your Doji sandwich. If this opens lower tomorrow, what do you got going on? Wave 1, Wave 2, Wave 3, the same magnitude as Wave 1. Look for your 200 to be a viable target. Okay, DOCN. Failed right smack dab at the 50. I don't know if that's a blue ice failure or not. Nope, I don't see the 200. But the failure rate at the 50, if this opens lower, or trades below this level, Wave 1, Wave 2, failure at the 50, everybody's watching, going into Wave 3. That. Kicker signal. You can see kind of your dumpling top. Now they've kicked it to the downside. What's that telling you? They're trying to get out of this one still with great enthusiasm. Look for a lot more downside. And one more, Momo. Wave 1, Wave 2. Look what happened right as you got to the T-line. There's your bearish Harame telling you the buying has stopped. Where's your first target? Probably right here. If it goes through there, you've got a lot of selling potential. All right, so these make some very simple entry strategies. Knowing what your signal pattern is looking like. If this opens lower, what do? We short it immediately. Now you got a bearish Doji sandwich. And what does a bearish Doji sandwich imply? More downside. And if they've closed right on a level that everybody else is watching, what do we expect from a Doji sandwich? More downside. If this opens lower, we can be buying immediately with a lot more confidence. So we know what it should be doing if it opens lower. It should be trading lower. So if this opened lower tomorrow and then came back up and closed above the 50, what do we do with that trade? We close it out because that's not doing what it's supposed to be doing. Doesn't mean the trade is over because it might do a little hammer signal and the next day it opens lower. You can reshort it, but the probabilities change knowing what it shouldn't be doing. We know what it should be doing, going in this direction, shouldn't be going in this direction. All right, this is starting to look a little bit squeamish here, with a possibility of a wedge formation. Harry, hang on to your individual ones until I tell Jim to do the double line. First, we want to see, has anybody got any general questions on any of the signals or candlestick analysis? All right, any questions? Oh, somebody was asking earlier, how long is a Saturday session? It's scheduled for 4 hours. But bring your sandwiches because more than likely it'll be somewhere between 6 and 8 hours because there's a lot of information to convey. And again, it's not necessarily so that you recognize the specifics. It's where you start getting your mind acclimated to identifying where the trade setups or what the trade setups look like and what to expect based upon how the market opens the next day and what the expectation is after the signal. It feels like we are day trading since you have to watch its action. Well, that's not, Sharon, not so much day trading on entries. Obviously, you want to have, you don't want to see something that you're expecting to be a good bullish trade. But if I was going to buy NSA tomorrow, I definitely wouldn't want to see it open down here, because that tells me it's not confirming to what we expect it to be doing, which is trading positive. On 3 dark crows. No, those aren't dark crows. MC, a dark crow is where this would be a dark crow. They opened here and closed here. And then the next day it opened right back up here again and traded back down. Those are just bearish days. Is it too aggressive to reverse the long position to short when far away from the T-line and trading below yesterday's low? It's not aggressive or not too aggressive. But it may not be your best short trade. What do we want to see? We don't know whether they're going to take this after it stopped out down here. That's not a very big move. What we're looking for is something that is showing strong selling, like a gap down through the T-line. So just because a uptrending stock has a sell signal, that doesn't mean you turn right around and short it, because it's already an uptrending stock. You need to see more confirmation. And because of the simplicity of candlestick scans, more than likely you're going to be able to find 3, 5, 10, 15, 20 much better short trades somewhere else. Oh yeah, you can buy puts, whatever. Yeah, shorting or going short also implies that it's going down. Nicholas, I always wait for the market to open. So many times you will see stocks whip all around after hours. But that's because during the day they might trade 2.7 million shares, and after hours they may be trading 24,000 shares. So it doesn't really reflect the true decision of investors. Back in somewhere around 2000, I can't remember the stock, but in the Wall Street Journal, I think they came out with an article about how this company had come up with a good cancer treatment. And I can't remember the numbers, but I want just to pick out some numbers. It closed at 17 the night before. After hours, it was trading up to 25. And before the market opened, it skyrocketed to 65 or so. So that meant people were buying at 65. And then 10 minutes later, it opened at 34 and then drifted down back toward 20 all day long. So you don't really want to pay attention to the after hours trading. Oh, Jay, that was a mere 21 years ago. I can't even remember what happened last week, let alone, I can't remember which one it was. I just remember the numbers. Okay, so I guess with that, up there it is again. Jim, go ahead and do the double line. And then 4.1 seconds, do the next double line. AutoZone. What is the question? A kicker gap up? Not really. That's not, remember, a kicker is a strong candle. That's really not a strong candle. That's just kind of choppy. Yeah, so, and then look at the whole chart. Which way is this chart telling you it's going? I have no idea. It just happened to be a day where they took it up a little bit, but that's a nothing chart. Airbnb, I would suspect it's going toward the 200-day moving average. FTCI, nothing wildly exciting other than it did hold up well. If this opens positive tomorrow, you could be buying it. I wouldn't want to see it close back below the 50. Wynn Resorts, you could go short. I'm sure all the travel destination stocks. Las Vegas Sands. If this opens lower tomorrow, you've got a bearish doji sandwich below the T-line after a failure at the 50. More than likely, you're heading back down to test this level. Best friend, short signal. Should I have entered on the gap opening, waited for it to trade below the T-line, or waited until the end of the day to be sure it was going to close below the T-line? Oh boy, that would have been a toughie to trade before the T-line. I'd rather have that little extra probability. So you may have missed out on 40 cents. I would rather short it on weakness, knowing that the probabilities are much greater in my favor. I don't need to be shorting at the, or buying at the absolute bottom and selling at the absolute top. I want to be trading where I know the probabilities of that trade is working with much greater probabilities in my favor. Ford didn't execute today. However, if you're long, you stay long. Notice where it bounced today, right off the T-line. This one's turned into kind of a nothing chart. You can see there's a little resistance level. You could be buying this one, but I'd want to see a lot of strength telling you the bulls have stepped back in. Right now, not really telling you much of anything. AMGN, nothing there. This one, if I was long, it has to open positive and trade positive. If it trades lower, not really going anywhere. Harley, oops, that's gone from the message to kind of the belt hold, bearish belt hold. A message you want to see close up here, breaking out. A belt hold closes back into the trading range. That's not a good looking chart. XPER, you stay long, but observe the obvious. They're having a little bit of trouble here at the 200. I would probably be ready to sell this if it came back down through the halfway point of this candle. That tells me they're not going in the getting up through the resistance level. Philip Morris, you could be buying this one. It's not going to make you a whole lot of money. Then you just have to watch to see what happens here at the 50, which would probably be acting as a resistance level. Checkpoint, charge point. Nothing here. If you are short, I'd be ready to cover on positive trading tomorrow, but it definitely would not be going long on this until they get back up through the T-line. And EVGO, that's kind of a nothing chart. Would not be long or short on this one. And Chegg, that's the same scenario. That's a pretty much, yeah, you should have been out of this one over the last couple of days. There's nothing there. And the wind came out of the sails on that signal right there. I'd be someplace else. And Lucid, if you were short, I'd be ready to cover the short, but I wouldn't be going long. XPEV, this one you could short if it opens lower, showing today that it failed at the T-line one more time. XLF, you could be going short on this one. Again, a failure at the 50 and a close below the T-line. Nvidia, you stay short, look for the 50. AMAT, you could be shorting this one. Just be aware that you're probably in a trend channel, so I'd watch to see what happens once it gets to the 50. SE, stay short, especially if this opens lower tomorrow, giving you a bearish doji sandwich. Viacom, if you're short, there's your bearish doji sandwich with a little kicker type signal. You could stay short on this one. Plus, observe the obvious. The T-line's been acting as resistance all the way down. Came back up, still acting as resistance. Where do you think this one's going? Probably to the bottom of this channel. Advanced Micro, stay short. Just watch to see what happens here at the 50. Cisco. If this opens lower tomorrow, a bearish harami, I would close it out with the expectation they're bringing it back here. Again, that's a sell signal if it confirms tomorrow. The only way to stay in this one is it has to open positive and trade positive. And even if it opened positive, you immediately put your sell stop at today's close, because if it opens positive and then starts selling off, That means the sellers are still in control. Kind of a nothing chart. I would have been out of this one today. That's ON. Square. Stay short. Costco. Another one that if this opens lower tomorrow and you were long, you close it out, you got a double top. Adobe. Nothing wildly exciting. If you are long, it has to open positive. If it opens lower and trades below the T line, you're sideways. Alcoa, a nothing chart. If you had been long, I would have been out of it today. Not going anywhere. Or it doesn't have anything identifying that it's going anywhere. AKTS. Nothing to get real excited about. Probably now at this point, notice how your stochastics are starting to roll over a little bit. The failure at the 50, kind of at this resistance level. If this opens lower tomorrow and I was long, I'd close it out. Apple did a dark cloud. If this opens lower, based upon probably the market's opening lower, close it out. FULC, little left-right combo, nothing greatly exciting, but if you like it, you can be buying it. Use the T-line as your stop. Sava, you can see where it's trading below the T-line. If you're short, stay short. Use the T-line as your stop. Stay long on PRAA. Nothing wrong there. Wait for a breakout. Yeah, at this point I would. You're running out of steam on your stochastics. I would rather see it break out through that level in this market condition. You could short Carnival. You could short Royal Caribbean. I keep forgetting. NHLC. I can't remember. Norwegian. Bristol. That's kind of a, yeah, that's a chart that I wouldn't get real excited about. It's probably heading higher, but I would have had a hard time if I was long holding on to it there, and I probably wouldn't be buying it back. All right, thank you, Henry. Norwegian, you can get ready to short this one on weakness. The Qs, you can get ready to short this on weakness. Space, stay short. Can't get up above the T line. Myrna, that's probably a chart I wouldn't be long or short. Just no direction to it right now. Thank you, Tim. Avocado, oh boy. That one I probably would be ready to close out. Even though it's gapped up, I wouldn't want to see it trade back below the low. So that means to stay in this, it has to open positive and trade positive tomorrow. If it starts trading back through here, that tells you the bears are pretty much taking control once they hit the top of this channel. I'd find someplace better. This one you can stay long after the kind of the little bullish flutter kicker type signal up through the 200. I would suspect it's coming up toward the top of the channel. Pfizer, you can buy this one. You're not going to make a heck of a lot of money, but it's heading in the right direction. So you want to watch some of these that have broken out. See if they're going to open positive. That's blue and BCLI. See if this is going to start another start a wave 3. So the market is not real great. The Dow hasn't closed below the T line, but the NASDAQ has. So this is not showing a real good bullish sentiment. NVAX, that's pretty much a nothing chart. It wouldn't be long or short right now. No direction. Medtronics, you can stay short with your safety stop below the T line. Oh wow, we're right about on time for once. No, maybe not. What is this one? WKME. You could be buying this one. Got a little Morningstar J-hook. I just watch what happens here and here. And Unity, stay short, but I'd probably use yesterday's open as a stop. If it comes up through there, that means I've used this area as support. There really is a CIA ticker. Is up a symbol, or is that just a question? Nothing here. Yeah, if you want to go short, no, you can't go short. It's a $2 stock. So that's a nothing chart. Oh, JB Hunt, you're right there. If you're long, you can stay long. You're waiting to see if it can break out through this level. There you go. Yeah, you don't have to hunt for the CIA symbol. They'll hunt you. SSYS, another good short. Did you stay short? Not that I know of. No, you had a bullish Harami. Yep, that one you should have been, if you shorted this one, definitely should have been out there. This one you can be shorting. Good long-legged doji at the 50. TFFP, not anything wildly exciting. Probably wouldn't pay attention to it unless it can get up through that level. Yeah, that must have been some sort of, was that a reverse split? You could go short. It's not going to make you a whole heck of a lot of money. But those stocks started selling off. Lowe's, and then a lot of the housing stocks started selling off. Oh, the takeover? All right. What was the... what was the takeover price? Which doesn't really matter because this one didn't look like... Bah. This one you wouldn't have known to be in it. So that's just one of those situations where it's not knowing whether you should be in the position or not. I guess this one would have been. But sometimes there's a close below the T line, and then there's an announcement the next day. And there's no way to anticipate that. All right. Well, tomorrow it will be important to see what the pre-market futures are telling us. Because if they take the NASDAQ down through the 50, that's going to be pulling things down pretty good. All right. With that, oh, okay. One more time. Somebody wants this link. There's your signing up for the weekend. All right. We'll see everybody bright and early tomorrow morning. We'll see you then.